Hi, Justin from Eclipse Financial Services with another of our short video blog articles on financial planning topics. Today's blog is a primer on mortgage broking and how mortgage brokers work. I guess one of the first questions is, what does a mortgage broker do? In essence, a mortgage broker is not an employee of one particular lender or bank, but is more a person who can pick and choose loans from a variety of different banks and lenders. How are mortgage brokers paid? In essence, all of the lenders pay some form of commission. Generally it's a fairly competitive industry, so say the big four banks' commissions are reasonably similar, but all lenders will pay some form of commission to the mortgage broker. Something you need to keep an eye on and make sure the broker is giving you the best loan package for your situation and not one that pays a high commission. So a good mortgage broker is effectively doing two things for a client. One is the obvious thing of deciding which lender has the best package for you. Here at Eclipse in mortgage broking, we're accredited to use over a dozen different lenders, and we've got 7 or 8 that we generally use most of the time. So I guess the difference is trying to walk into 6 different banks in your town, tell them your situation, go through the process, have them tell you what their loan package that suits you looks like, and then comparing all of those is something that a mortgage broker should be able to do for you. One person, one roof, all those different lenders you can access. Most mortgage brokers do that. Where we pride ourselves at Eclipse is having financial planners in-house as well. We can take it a little bit further and talk a lot more to you about the loan that you're taking on and the best way to structure it to A, repay it as quickly as possible and minimise your interest, and B, ensure you're setting it up for the best way for your any taxation benefits. So that's the type of loan that you're going for. You know, how long do you want to borrow the money over? Banks will approve loans over 25, 30, even 35 years. Probably not advisable to take a 25-year loan if you're 60 years of age when you take it out. So that's one of the first things to consider. Other things to consider are whether you're paying back a loan on an interest-only basis, which means you're never actually paying the debt off, or whether you're paying more back and covering some principal each month and reducing your loan over time. One of the key things for consideration is there's 2 different styles of making accelerated payments on home loans nowadays in Australia. There's offset accounts and redraw accounts. Offset accounts are where you're putting your extra payments into a bank account, and they're offsetting the deposit balance in that bank account against the negative loan balance. So if you've got 50,000 in your offset account and your loan balance is 400,000, you're only paying interest on $350,000. The other way is what's called a redraw, where you're physically paying it off the loan, but the bank's keeping a tally of your extra payments and you can redraw them at any time. A few key differences between the two, and a lot of it's driven around tax and flexibility down the line if you do something different with that property or investment that you've purchased, and that's where you need advice. The other big thing to take into consideration is package discounts. If you're on a reasonable income and you've got decent sized loans, most banks now will offer significant discounts on their variable rates, up to 1.1% off their standard variable rate to try and attract your business. Those packages will often come with credit cards provided, discounts on home loan insurance, all those things. So really it's finding a good mortgage broker who's experienced, who can deal with a variety of lenders, and who either understands how all these things can work, or who can liaise with your accountant or a financial planner to make sure that you're buying the right type of loan, and then that you're buying the cheapest loan you can find from all the different lenders once you've worked out what sort of features you want. As always, this is general advice. It doesn't take into account your personal situation, and you should always come in and talk to a mortgage broker or a financial planner before you make a decision that relates to you. Thanks for listening.